I've talked about this in previous videos, but this is still very relevant to be able to tell if you have a low probability trading environment. So you can see that we dropped down below through here, and it looked like we were going to flush and fill the gap this morning, but we didn't really reject off VWAP. And usually what you need is, these are just one standard deviations of VWAP. Almost all the time you'll see typically the price bounce off of VWAP, then bounce off of the standard deviation, then continue lower. That's a high probability trend day. If you don't get that, the chances of you getting no trend day, like just a chop shit day, are very high. So then we got this monster rip through everything, and I was in a butterfly, and I just held the butterfly because we didn't get confirmation. We didn't get a bounce off VWAP. We didn't even get a bounce off the second standard deviation. So I knew that our chances of flushing back to VWAP are actually quite high. Now we went all the way through VWAP. So if we want to continue up higher, we need to go up. We need to bounce off VWAP. Then we need to bounce off one standard deviation. But time's running out in the day. Now, if we wanted to continue lower, we could. We bounced off here. Now we bounce off VWAP. Now we drop lower. But if we flush through here and we want continuation, we probably needed to retest that and bounce off there. And I would just exit the butterfly on a retest of that. That's how you're able to use these standard deviation lines in a low probability trading environment to determine kind of what the next move is likely to be. And this probably is just algorithms testing the bid ask. They're just moving around, seeing what's out there and what's going on. And that's usually what you get.